Hello, and welcome to South King County Real Estate Update for February 19th, 2021. Thank you for joining me. Sorry, I apologize for being a few minutes late, but I was talking to myself for 10 minutes, so I apologize for the delay. I will start over because none of you saw what I did for the previous 10 minutes, but we'll get going now. So without further ado, we'll go ahead and jump into the slides. All right, so South King County real estate update for February 19th. Let's find out what happened this week. First off, just a little bit of housekeeping here. I do have my next paint night scheduled. And that will be on Monday, March 22nd. All of the materials provided slots have been filled up, but you can still join us if you'd like to provide your own materials. It's just a fun night at home, sitting and painting this beautiful sunflower here. So the link is in the description below if you are interested in signing up. And I'm changing my format for my show a little bit this week. We're going forward, actually. I'm going to start off with a story about something that happened throughout the week in real estate. So this week I had a client that I am working on helping them find a manufactured home. They're looking for a 3-bedroom manufactured home in a very specific area. And there was one that came on the market and we went and looked at it and it wasn't the right fit. And we've been waiting for a little bit to see if anything does come on the market. And just the lack of inventory there is showing. There's just nothing available. So in an effort to try and find a home for this client, I'm writing letters to the owners of the properties in the areas that they're looking at to try and secure a sale for them, find something off market so that we can find them a home that actually is exactly what they want. It's been because it's been a challenge just going with the on market inventory because there's nothing there. So sometimes you do have to go above and beyond and take that extra step to seek out options that are not necessarily easily available. And I will keep you updated on how this goes, let you know how many letters or responses I get from my letter, and just, yeah, keep you updated as we go forward. But I did think it was interesting to share this kind of information. Not a lot of people know that real estate agents can sell off-market properties. So if we can find one, as I hope we do, we can find them their perfect home and get them moved in, and the seller doesn't have to go through the hassle of being on the market and having a whole bunch of people through their home. So jumping back into the slides. This kind of shows the lack of inventory. I showed this graph last week on my show, but you can see over the past 10 years, it has just dwindled. Our inventory has gone down and down and down over time until we're now way below where we've been, and it's record lows. So that means our home prices are going up. Also combined with the low interest rates, buyers have more buying capability. So that is also driving these home prices up as well. And to jump into our local market stats for our market stat minute for King County, we had 638 new listings, 732 pendings, and 572 sold. So this is the showing stats for North America. Oh, actually, hold on. On here, you can see the pending sales just absolutely drop off this past week. but I believe that is mainly due to the snow. So we'll probably see that bounce back up next week. But a lot of people that were planning on going out and looking at homes this weekend either didn't make their appointment or canceled their appointment because of the snow. They thought it was better to stay where it was safe. So a lot of homes that went on the market for end of the week, middle of the week, end of the week, last week, are still on the market this week, just because not as many people could get out and to see them because of the weather. And this is for North America for showing time. And you can see that that has affected the nation as a whole. And showings for last week went down significantly, just totally diverging from the line we were on. And, but I mean, there were a great number of states that had strange weather this past week. So this is not too surprising, and I expect to have more showings again next week. So the biggest news story out of the week was mortgage rates. Mortgage rates shoot up to highest levels since mid-November. We're stuck at 2.73 for like 3 weeks. And now it has jumped up a little bit due to the Treasury, the yield in the 10-year Treasury. And that had its biggest one-day jump since November. And that basically generates fears about inflation. So inflation is bad for bonds because it erodes the value of their fixed payments. Higher inflation could possibly lead to the Federal Reserve to raise interest rates and place more upward pressure on yields and mortgage rates. So basically inflation, if there's a lot of inflation, mortgage rates are going to go up to adjust for that. And I thought this was interesting. This is from the Master Builders Association president and CEO. Demand for buying a home exceeds supply in most of the country this winter, especially in the lower end of the market. We know that's very much true in our area. And then he goes on to say, although purchase applications continue to outpace year-ago levels, activities have declined slightly in recent weeks because of lack of inventory and upward pressure that it is putting on homes. The slow rise in mortgage rates over the past month has modestly dampened refinancing activity. Refinances are still up compared to last year, but they have dipped below 70% for the first time in August, or I mean, since October, not August. But yeah, we are seeing less purchase applications, fewer refinances. We are seeing a little bit of that dip in the market due to the rising interest rates, as well as the weather. So this was from last week. As I said before, we were at 2.73 a week ago, and now we've jumped up to 2.81. So honestly, it's a decent jump, but it's not as bad as it could be. And economists are expecting modest increases in home loan rates over the year, but they'll remain historically low. They're expected to remain historically low throughout the year until the economy recovers. However, we did see a rise in unemployment aid last week. So that may be a sign that our economy isn't recovering as fast as some of us would like. But that also means interest rates, I predict, will tick back down over the next couple of weeks. Not much, but this rise, there's some economists that are saying that's a little bit of an overreaction to what is going on in the Treasury bonds. So there might be a little adjustment there. So as expected, mortgage rates rose last week. Like I said, this is the big news story. So we're covering mortgage rates in depth today. But U.S. retail sales jumped by 5.3% in January, but well above expectations as millions of Americans received their stimulus check. So this is like a temporary improvement in the economy. People got their stimulus checks, and maybe they'd been waiting to buy some things that they needed, but retail sales did go up as a reflection of that. And it went up more than it was expected to. But there shouldn't be any concerns for home buyers because we are still at historically low rates. Like when my parents bought their first home, they assumed a loan at about 9% and probably wouldn't have been able to buy that home if they hadn't been able to assume that loan, because loans were at 12 or 13% around that time. So we are well below that. We are historically low if you look at it over a many year time span. And this is just an example of how much interest rates make a difference on your bottom line, on your monthly payment. So along the top, we have interest rates changing at half a percent as we go across. We're between 2.5% and 3% now. So I use 3% as our example here. On a $500,000 home, if the rate was 3%, the monthly payment in this example, which is 30-year fixed and does not include taxes and insurance, but the monthly payment would be $2,108. If it goes up just half a percentage to 3.5%, your monthly payment will be $2,245 per month, making $137 a month difference. And that is 0.5%. So if interest rates change more than that, obviously the difference would be greater than that. But I just thought this was an interesting thing to point out because interest rates really do make a huge difference on what you can afford. And the fact that they ticked up last week isn't terrible because we're still at historic lows. But if you're thinking about making a move, I'd start talking to a lender sooner than later. So another piece of news from our area, property tax bills are arriving in King County, and several areas are seeing double-digit increases. So Algona is actually had a 18% increase in taxes, 15% in Maple Valley, 13% in Pacific, and 11% in Enumclaw. These are the top ones, of course. But if you look at how these are broken out. So Algona here, that raised 18.27% from 2020 to 2021. Algona is one of the places that has significantly changed in the value of their homes. There's been like Algona, Pacific, Enumclaw, these are all areas where the housing market has just exploded in those areas. Home values have gone up record numbers. So a lot of the increase in the taxes here is due to, it's a combination of things, but a lot of it's due to the increase in home values. And since property taxes are charged on the basis of a home's value, it's tax assessed value. If home values are going up, taxes are going to go up, which just makes sense. In addition to that, there have been levies for school districts, fire districts, and including all of these cities down here where there were approved levies for fire and fire services in school. So the combination of the approved taxes and the increased home values just made these areas explode on their tax rate. You see in Seattle, the home value dropped from 690 to 674,000, and taxes for the median home in Seattle dropped about 1.5%. Whereas if you look at Renton, home values went up from 445 to 455,000 on average, and taxes went up about 2.45%. So you can see that it's not just the levied taxes that are making a difference here. It is also the home values that the tax is based on. So that's all I have for you today. If you do have any questions, please feel free to reach out. I would love to chat about them with you. And in the description below, you'll see a link to register for my newsletter, send referrals, my contact information. If you like this video, please like and subscribe so you see more of them in the future. I really appreciate you taking the time to watch my little real estate update show. Thank you so much for joining in. I will be here back again Friday at 3 p.m. next week, and I hope to see you then. Thanks again.